Hello and welcome back to Bunnex Investment Group. In this video, I'm going to give you a very simple trading strategy, which is basically a trading system that you can apply on any instrument of your choice. I'm going to keep it simple, short and precise, straight to the point, no chaff, no bluff. All right, so without wasting much of your time, all that we are going to be looking for is we need to see these three steps, which is 1, liquidity grab, 2, we need to see break of structure, and then 3, we need to make an entry using the concept that I'll show you. All right, so basically what do we mean by everything that I've just said? All that we want to see is basically to see the market. In this particular case, you can see that the market created this particular leg, some sort of a leg, and then it went to the downside. From that leg, we can see this is the highest point that was issued, and all that we want to see is basically break or price to reach above that particular point. So we can safely say this is a clear break of structure, a clear liquidity grab that was issued by the market makers. We can see this particular point, which is basically to take out the stop losses as well as to induce traders to go long and basically to trigger all the pendings that were above to go up, that were for breakout traders. So after that, the next thing is we now need to see a clear break of structure from a liquidity grab. So if we can see the market creating this price liquidity grab, break of structure that was issued at this particular point, and then after that break of structure, we expect to see a shift of price. So I've just shown you creation of liquidity zone, checkout of liquidity zone, break of structure with a shift, and then our entry is supposed to be at an order block. So what is an order block? Basically, it is actually a point where we actually derive from the last candle before the major shift has happened. So the last candle before the major shift has happened is basically this particular candle. It's high and it's low. So it's high and it's low, we protrude it into the future. So it's shift, and then the market is expected to come back to the order block for the next move. We can see that the market shifted, see that the market went back to the particular order block, and then it shifted right down to where we actually expected it to be. Then we need to have another example so that we can understand clearly. More examples will mean that we understand and comprehend properly. So in this particular case, you can see there was this particular law that was issued, and this is a law that was sort of the first leg that was issued, and a liquidity grab was then later issued. So after that liquidity grab, we can see an order block which was right here. We can see the market came to retest that particular order block, and then it shifted to the direction that we intended to see it go. Then here we can see there was a first leg, and then after that first leg, we can see a liquidity grab right above this particular first leg. Right? So in some instances, we would have said this is the second leg and we were expecting to see a shift, but the market later proved to us that this was not the second leg and issued this second leg at this particular point. And then we've said at the order block before creation of the second leg. So the high and low of the last candlestick before the major shift was issued is basically this one. We protrude it into the future, and we can see that in the future we had double retest of that particular order block, and the market went our direction, right? Can we keep on moving? I'm sure you are actually getting the concept. Let us actually look at other examples. But before we do so, check out our free Telegram channel. I'll leave the link in the description box below so that you can be part of our free educational channel. In this particular case, you can see that we had a first leg that was issued. 1, creation of this particular order block, and then 2, grab of liquidity, and then shift to the upside. After that, what do we expect? We want to see an order block, right? An order block right at the last green candle before a shift occurred. So this is the order block, and all that we need, if an order block is too wide like this, we need to actually demarcate the 50% of that particular order block so that when the market comes to that particular zone, we can actually make our entry. And it actually occurred like that. So if we keep on, we can see that the market actually repeats the same thing over and over again, and by repetition, that is where we actually get our entries. On that note, we've come to the end of our today's video. Thank you for watching. Like and subscribe, and I'll see you in the next one.